You know, with all the talk about AI these days, the number one question I get from traders is AI coming from my job? Are we about to be replaced by robots? Well, today, we're going to tackle that head on. Think of this as a training session where we'll explore how AI isn't a replacement, but an incredibly powerful co-pilot. So let's really center our entire discussion around this one question. Can AI become your trading co-pilot? Now think about what a co-pilot does. They're not there to take over the controls. They're there to manage the systems, run the checklists, analyze the data, and feed you the critical info you need to fly the planes safely and effectively. That's the exact role we're talking about for AI in your trading. And the tool we're going to be using today is called Forecaster. So what is it? Just imagine for a second that you have a whole team of research analysts working for you 24/7. They're digging through mountains of historical data, finding subtle seasonal patterns, basically doing all the boring heavy lifting analysis. And their only job? To bring you a short, clean list of the highest probability trade setups. That's what this platform is all about. It lets you work smarter, not just harder. So here's our game plan. We're going to find some high probability setups. Then I'll show you how to read the seasonality charts to really build your confidence. After that, we'll decode the historical numbers, and then we'll wrap it all up with a simple daily checklist you can use right away. All right, let's get into it. Every single trading day has to start somewhere, right? For us, it starts with what's called the quantum screener. Now, don't let the fancy name fool you. It's basically just a massive, powerful filter for the entire market. Our job is to tell it what to look for, and its job is to bring us the best of the best. And the process itself, it's ridiculously simple. It's a three-step deal. First, you pick your time frame. We'll look at the next month. Second, you choose the market you're interested in. We'll stick with Forex for this example. And third, well, that's it. You let the AI do the work and show you the top results. And boom, here's what it kicks out. The screener just cuts through all the noise. And I want you to look at that very top line, the Swiss franc versus the Japanese yen, the CHF/JPY. The AI is flagging this with a 100% historical win rate. Okay, that's interesting. That's our starting point. Let's go dig in. 100%. Just let that number sink in for a second. Now, what does this actually mean? It means that for this exact time frame we're looking at, this trade setup has historically worked out every single time. Of course, we all know the disclaimer, past performance is no guarantee of future results, but is it an unbelievably strong signal to investigate further? Absolutely. So we have this perfect historical strike rate. But listen, we are professionals. We never ever trade based on a single number. The very next step is to dive into the seasonality charts. We need to actually see the historical pattern with our own eyes. This is where we go from having a statistic to having real confidence in a trade idea. Okay, let's start building the case. We'll look at the recent past first. See this yellow line? This shows you the average price movement for the Swiss yen over the last 3 years during this specific seasonal window. You can see it, right? A pretty clear move higher. That's a good start, but it's not enough. Now watch this. This is the magic. Let's layer on the 7-year average. And now let's add the 15-year average. What are we looking for? We're looking for agreement. We're looking for all 3 lines to be telling us the same story. And as you can plainly see, they're all moving up and they are all moving together. This is a huge, huge confirmation. And this really gets to the heart of the strategy. When you see the short-term, the medium-term, and the long-term history all pointing in the same direction, when they all line up like this, the probability of that pattern repeating just goes way, way up. It's not a fluke, it's a clear, consistent, historical tendency. All right, so we've seen the pattern visually, which is great. But now it's time to get into the hard data. We need to look at the numbers behind the charts. This is how we move from a good-looking idea to a trade plan that's actually backed by statistics. This is where we quantify our edge. First up is correlation. So what does this mean? In simple terms, it's a score that tells us how closely today's price is following its historical roadmap. And as a rule of thumb, anything over 80% is considered really strong. The fact that we're currently at 83%, that tells us the market is following the historical scripts almost perfectly right now. That is another major confidence booster. So, if this pattern plays out, what has it delivered in the past? Well, the data shows us that the average historical return for this trade is 2.4%. And keep in mind, that's in a window of just about 2 weeks, from April 2nd to the 18th. For the Forex market, that is a really solid return. And you might be thinking, well, what if one massive year is skewing that average? That is a great question, but check this out. When we look at the year-by-year results, you see consistency, positive returns year after year. And this is the key. This isn't some black box AI prediction. We are basing our decisions on cold, hard, verifiable market data. Okay, this is it. We've found a great setup, we've validated it with charts and with data. Now for the most important part of this whole training. How do we turn this into a simple, repeatable process that you can use every single day? This is where analysis becomes action. This is your daily checklist. Here's the routine. 1, you run the screener. 2, you look for setups with at least an 80% strike rate. 3, you pull up the seasonality charts and look for that nice alignment we just saw. 4, you check the numbers to verify your confidence. 5, you can even drill down and see which day is historically the best to enter. And then number 6, this is the big one, the one that matters most. You plan your trade. You know your entry, you know your exit, and you know your risk before you ever put a single dollar on the line. And let's pause for a quick mentor's note, because this is non-negotiable. I don't care if a system has a 100% historical record. The future is always uncertain. Your stop loss is your seatbelt. It is a pre-set order that automatically gets you out if the trade goes against you. You decide before you're in the trade and emotions are high exactly how much you are willing to lose. This protects your capital, period. And hand in hand with your stop loss is position sizing. This just means you figure out how much to trade based on your stop loss. If the trade goes wrong and hits your stop, how much of your account will you lose? 1%? 2%? You decide that in advance. Proper sizing ensures that no single trade can ever blow you up. This, my friends, is what separates professional traders from gamblers. Which brings us full circle. The AI, the forecaster, it gives us the data. It does the heavy lifting. But the real edge, the thing that makes you a profitable trader, isn't just having the data. It's in knowing how to read it, how to interpret it, and how to act on it with discipline. The AI is your co-pilot. It's an amazing one. But you are always the pilot in command.